Hi guys, and welcome back to the Block on Blocks. Today's guest is Mr. José Pereira, Managing Director at Facet. Thank you for being here.
Thank you so much for having me.
Of course. So we always start with just an introduction to yourself and to Facet and what you guys are doing.
So about myself, I'm originally from Ecuador. Left home when I was 18. I lived in Japan, lived in the UK, lived in Luxembourg, moved to Dubai 3 years ago. I started in traditional finance, private equity and real estate funds. And then I got obsessed with crypto unhealthily. I was very lucky to join Swissborg, which is an app based out of Lausanne, Switzerland, digital wealth management, built their corporate venture arm, and then I went off to do venture building. When I was doing venture building, I was building platforms for a lot of real asset issuers. Every time that I was building these platforms, mostly as a service, we came to the same block, which was, okay, we have the technology, tokenization is easy, but now how do you sell these assets? Mm-hmm. That's a difficult part, like who's gonna buy them and what do you need to sell these legally? That's when I came across Facet. And when I discovered everything, the infrastructure that they had built, I went all in with them so that we can leverage that to bring more assets on chain and then expand that infrastructure to more builders that had the same barriers to enter the market. So Facet was founded in 2018, 7 years ago, which is a long time. I joined them in January. It was founded with the mission of making geography irrelevant, so that people that are based in London, in Karachi, in Lagos, in South America have the same access to financial products. And that's what they've built so far, and that's what we are extending now. So users in our platform can buy stocks, bonds, funds, metals, crypto. We're launching global debit cards, USD accounts, and we've just put everything into one single platform. But the thing is, everything runs on blockchain. So every asset that you buy there is a tokenized reward asset that settles on Arbitrum. And we have other products that are on XDC. The card products, the virtual IBANs, are also tied to the wallets. So what we've done is that we've taken, I think, one of the best on-chain products, and we've put them all into one direct-to-consumer platform that is regulated in multiple countries.
That's really, really awesome. So it's basically a platform like an exchange, but for RWAs and tokenized assets.
Exactly.
That's really
so the way that we frame it is not just, like, we don't tell people these are tokenized assets, this is tokenized gold. It's just buy gold, earn yield, buy Apple, buy Nvidia, S&P 500, and then we bring it to countries where your traditional banks, your traditional brokers haven't reached. So for example, if you are in South America, Africa, Asia, you don't have Robinhood, you don't have interactive brokers. So there is product market fit for these products in these markets. And what we're doing is that we're using tokenization infrastructure to bring these to users. So for example, when you try to buy these type of assets, traditional stocks, you have accreditation barriers of entry. You need to buy a full stock. If you're buying a stock of Apple, for example, price is around $200, $250. With tokenization and with this infrastructure, what we do is that we bring down the cost of entry, the barrier of entry, so our users can buy stocks with a minimum of $10.
Yeah, that's really cool. And can they be traded 24/7, or is it like the stock market?
No. So that is something that's still not available yet fully in tokenized real assets. Mm-hmm. And the reason for that is because how it works is that when a user presses buy in our app to buy Apple stock, this order is routed to a partner that's called Denari and Alpaca, and they buy the stock from the stock exchange.
In real time.
They hold it in custody. They create the token that represents this. They sell it to us, we sell it to our user. So the liquidity of this asset depends on the stock market.
Okay.
Yeah.
All right. So then when they want to sell, it would have to also be at a time when markets open and the partner can make that sell.
And that's a very important point, because a lot of people that are entering real assets, they're asking, where does the liquidity come from?
Yeah.
Because there's a misconception that you would have a liquidity pool of the on-chain asset and then a liquidity pool of the real asset.
Right.
But the real liquidity is how fast, how easy can you sell it in the real world?
Yeah.
And that's what our partner Denari does with Alpaca, which is getting the best price execution on your traditional brokers, on the New York Stock Exchange.
Okay. And when a buyer clicks buy,
yeah,
how long does it take for that process to happen?
Everything is instant. Everything is instant.
Wow.
If the stock market is closed, of course, and the order goes on hold until it opens.
Yeah.
Yeah.
That's crazy. That's amazing how fast that can happen.
Yeah.
Really cool. So you said Facet was founded in 2018,
Yeah.
which is really impressive to me because I feel like back then no one was really thinking about tokenized assets. So how did that happen? How did that start?
So it started as a crypto exchange, and then it pivoted to tokenized assets, and then from tokenized assets to now the banking products. Because we came to the realization this year that the hero product in markets like Pakistan, like Bangladesh, is the global cards and the US dollar accounts. I think those are the products that make the most impact, the most difference. And then we would cross-sell them into the investment products.
Okay.
So yeah, it's taken a directional change over the last years.
Yeah. And geographically, what areas are you guys most active in, and what areas are you looking to expand into?
So headquartered here in the UAE. Markets are UAE, Pakistan, Indonesia, Turkey, and Malaysia. Those are the 5 main markets.
Okay.
Yeah.
Why do you think that is?
Founders are Bangladeshi, American, Pakistani, British.
Wow.
And there is a very local component in terms of onboarding these users as well, being on the ground, getting the market context, having the relationships with the regulators that would give you an advantage to operate where other companies cannot enter these markets. So there's a big advantage in going to these markets. And also, like I said before, it's where these products make the most difference. If you think of stablecoins, what is the value of stablecoins in the US? Why would you move to stablecoins? If you think of tokenized treasuries, why would they bring any value in the US where you have so many ways to buy it? You can buy it in all of your banks, Robinhood, all of the places. There was an announcement that Robinhood made, I think in June of this year, which was bringing tokenized stocks to Europe. But Europe has 10 places to buy stocks.
Yeah.
So if you look at these markets, it's very difficult to access these global products. So we're focusing on where could we go to a less saturated market using blockchain technology, leveraging the relationships with the regulators.
Yeah.
Yeah.
Okay, that's really cool. Accessibility. I imagine that comes with a lot of regulatory complexity.
Yeah.
What are some of the challenges you guys face, and how do you overcome them?
So there's different ways to approach the market. One is operating in countries that have a proper regulatory framework for digital assets. Then you're going to have the countries that are unregulated, and then you're going to have the ones that are blocking, that have banned virtual assets. So we operate in the first two. I think the biggest challenge when it comes to scalability is that regulation is not, what's the word? You need to get your license in the UAE, but this license doesn't mean that you can operate in Europe. You have to do your MiCA license, and then Singapore, you have a complete other one. Each of these licenses take 2 years. Regulatory capital, local compliance teams. So it's something that you have to do very sequentially. And that global expansion is tricky. Like, you need to have a sequence.
What about unregulated markets?
Unregulated markets, there are some limitations. One is that you do KYC, the user interacts with an entity that's offshore, and that's how you serve unregulated markets. You have some limitations in terms of the marketing that you can do and how direct you can go. So if you work in a regulated market, let's say like the UAE where we have ARA, then you can do all of your paid ads. You can go and post on Instagram ads and send them direct to your app. So the customer acquisition cost can be a lot more efficient. Your marketing dollar can be a lot more efficient. So another point is also the fiat on and off ramps. Because if you are operating in a market where you don't have the fiat on and off ramps and you want to sell stocks and you're doing your marketing here, then it means that, let's say that the typical user experience is that you have one main crypto exchange, and then you would on-ramp into, let's say, Binance or OKX, and then you would send it to a wallet, and then in your wallet you interact with the DeFi protocol. So the chances of losing the customer in any of those parts is quite high, versus in markets where you're regulated, you have the ramps and it's just a one-click, download our app, onboard, deposit, and buy.
Because I was going to ask about this. A lot of the regions that you mentioned, I mean, especially when we talk about unregulated regions, also adoption there is quite low, happening at a lower rate. Whereas like in Dubai, for example, it's quite common. A lot of people use crypto. They're familiar at least with crypto. So how do you guys build trust with the customers in these regions that maybe don't have a full understanding of what blockchain technology is, how do you build that trust so they can actually, onboard and then purchase an asset?
It's a tricky one, because I would say that actually the unregulated markets are the ones where, let's say, stablecoins make the biggest difference, right? So you have a lot of people that are freelancers and they get paid on USDT, and then how do you receive it? They would have they would use these platforms. Those are the type of users that we serve mostly. Then how do you build trust? It's a very special topic, because it's different to countries where you already trust the digital. For example, I was in Indonesia 2 months ago, and we were doing literally in-person onboarding of users to the app. And they were not comparing us, okay, are you cheaper with Binance than Binance? Are you cheaper than these other options? Their main question was, how do I know that the platform is not going to disappear with my money? Yeah. It's not going to shut down. So yeah, that trust component means that the way that you approach user acquisition has to be a bit different. And in these markets in particular, it has to be more underground than directly digital.
And in terms of the assets that you are selling on chain, have you found that maybe more traditional assets are easier to get through to these markets rather than maybe assets that are newer to them?
Yeah, I spend a lot of time with looking at the data, because it informs what do we focus on in terms of what products do we bring.
Yeah.
95% of the trading volume goes to the same 5 assets. So we can list 200 stocks.
Yeah.
All of the buys go to the same stocks: Nvidia, Apple, S&P 500, Google, and gold.
Gold, yeah. I would imagine gold would be a big one.
So if we list a stock of a pharmaceutical company, how relevant is that to our users in Pakistan, Bangladesh, Indonesia, right?
Yeah.
So how much transaction volume does that send?
Okay. And what does your team look like? Is the team based here, or do you guys have?
We have teams here in Pakistan, Indonesia, and Turkey.
Okay.
Yeah.
And how's it managing all of that?
Yeah, it's exciting. I mean, you have a lot of a lot of the technology is in Pakistan. Mm-hmm. We have the Indonesian team as well. A lot of the marketing strategy, we do it here from the UAE.
Yeah.
But yeah.
Okay, that's awesome. And what's the culture like at Facet? I mean, you guys are doing something that even today, where tokenized assets are a hype and everyone's talking about them. I think you guys are one of the only companies I've met, not the only, but probably one of the only I've met, that has actually created a secondary, like a market, a trading area, playground for tokenized assets. How do you think that came about quicker for you guys than for others?
Multiple reasons. So one is that you have the hype of tokenization. That we're not really driving that hype. I think that's affecting more other types of assets like real estate. There's a lot of hype in real estate and tokenized real estate, but the assets that we're bringing are stocks, stable coins, bank accounts, and debit cards. So it's a bit different. And what you were saying is, how have we been able to get more users? I think it's because we're not directly, creating a secondary market. The secondary market depends on the liquidity integration of the stock exchanges. A lot of the barriers that have held other asset classes in tokenization is that you don't have the data infrastructure to create a secondary market. So if you think of real estate, for example, real estate is priced on a quarterly basis. You have valuations that depend on what is the market average of properties that are similar in the similar area, and then you would be able to price the asset. But then what happens when you tokenize it, you put it in a marketplace, and then this could be traded 24/7. But the actual valuation comes every 3 months. So that's the gap that still hasn't been solved. We are not facing this issue because we are integrating assets that trade based on the Oracle price. So the Oracle price is what tells you this token is worth this because this is what it's worth on the stock market. So it's a different comparison depending on the asset class.
Yeah. And in your opinion, what assets do you think are next to be successful being tokenized?
There's a lot of exciting asset classes. The one that I'm the most interested is tokenized funds. I think that there's a lot of hedge funds that have tokenized. Midas is a platform that has 3 or 4 of them. and the average yields of these are 15 to 20%. So I think that it's a very attractive hands-off strategy for a lot of people to just park their money there. What else? I think real estate, it's going to depend on what type of real estate. So if it's development, early stage real estate that has that appreciation and it's backed by a reputable developer, if you think MR tomorrow tokenized real estate and you can buy something early, I think there's a market for that.
Yeah.
If you're tokenizing a random piece of commercial real estate in a city that no one knows about, it's going to be almost impossible to create a market for that. The other assets that I think we still haven't seen is things that are more culturally relevant. Think of sports, brand, IP, whenever they move in to tokenize. The thing is, we are in the process of bringing some of these on chain, but the sales cycle is a lot longer because they have a lot of reputation risk in terms of whatever they want to tokenize, and if there's a market and if the buy pressure is not there. So I think that that's going to be one of the things that over the next year we're going to see. So if you think of a famous football team, cricket team, whatever it is, that they bring part of their equity on chain, then the user demand would be there, not because of the financial component, but because people might just want to own a part of it.
Yeah.
And what that means is that it would reprice a lot of these assets, because right now sports, brands and IP are priced by private equity funds, and they would look at the revenues and put a multiple. But what happens when you offer this to the fans, to the retail, to everyone globally, and then it's priced based on how culturally relevant, how accessible it is, and as a meter of liquidity, then the valuation could skyrocket.
Yeah.
Yeah.
Since tokenized assets are like a big hype right now, and a lot of companies, a lot of investors are talking about tokenizing their assets. Tokenized funds is something that we hear a lot about now, actually. How would you advise a normal buyer to check that the token they're purchasing is actually backed by an asset? Like, what can they look for?
So most of the tokens that are bought in real-world assets, you're not buying the asset directly, right? Because normally the way that this is set up is that a company structures a special purpose vehicle, which is a company that owns the asset, and then they tokenize the shares in this company. So what you're buying most of the times is the tokenized shares of the company that's in between. Now, VARA here in the UAE has come up with this regulatory framework where you can tokenize the asset directly, so you don't have that middle layer.
Yeah.
They did it with Dubai Land Department, they tokenized title deeds. They did it on XRP, the company was Control Alt. There you can buy the actual asset. You could get the rights of when it comes to governance, when it comes to the yields that it generates. But I would say that 90% of all of the other assets that are being tokenized right now are using the SPV structure.
Yeah.
Yeah.
Okay. So when they are using the SPV structure, the SPV owns the assets.
Yeah.
And then the investors are purchasing shares in the SPV.
In the SPV. So you are relying on the counterparty of the management of the SPV.
Okay. And you guys, do you tokenize the assets yourself?
Right now, we are integrating with tokenization partners.
Okay.
But our roadmap for the next 6 months is to start tokenizing ourselves. And that is for two reasons. One is because we have a lot of asset issuers that come to us and they want to tokenize. Some of these assets, we cannot promise, okay, there's going to be liquidity, but what we can do is that we can tokenize them for them, we can build a marketplace for them, and then they could sell them to their users using our infrastructure. And the second one is because there's specific assets, if you think of pre-IPO equity, for example, that would be a big differentiator in markets like the UAE. So if you think of, okay, we have tokenized stocks, great in Asia, Africa, South America, where you don't have access there. But if you think of Dubai, how do you compete in Dubai when you have equity, you have capital.com, you have multiple of these players? Then the way that we think about product strategy there is how can we bring assets that you cannot buy in your bank, you cannot buy in your crypto exchange, and you cannot buy in your traditional broker. So that's where tokenization gives us that advantage.
Yeah. So you said pre-IPO.
Yeah.
This is something that I've heard from two people. I've heard it from you, I've heard it from our founder. So can you explain a little bit more about what you mean and the opportunities that lie within that word, pre-IPO?
So before a company goes public, there are multiple phases of funding, and there is upside and risk in each of those. So you will have your seed round, your series A, B, C, D, and then the company goes to a stock exchange. We could put all of these rounds in a pre-IPO category. So there's companies like OpenAI, SpaceX, Anthropic, that there is a private market for these stocks before they become publicly available to everyone in the stock exchange. I think that that's one of the biggest structural transformations that could be enabled by tokenization, which means that you can get tokenized exposure to these assets before they list in the stock exchange. If you think of OpenAI, I think they're looking to IPO at 1 trillion, which is insane.
Crazy.
I saw it in a pre-IPO platform. I think it was at 300 billion, I think maybe 6 months ago. So it's a 3x there. Figma as well. Figma did an IPO around 2-3 months ago, and the multiple was also great. Which one else? Circle. Circle did massive. So if you could get access to these type of products before, it would be something that hasn't been available.
Yeah, that's true. Because like I said, our founder, whenever we talk about RWAs, he's like, pre-IPO is where it's at. Like that's where it's going to be the biggest opportunity in this market. Yeah,
and I think it's a product that you could sell very, very easily. Like if you were selling stocks of OpenAI, private equity of that, then it's something that in the UAE there would be very high chance of product market fit. I think with the right marketing, it will be a very, very strong differentiator. Again, if you compare it with any random stock that's less culturally relevant, but if you see just the adoption of ChatGPT in general over the last 2 years, there was a government announcement that they were going to give free ChatGPT Pro. And then if you pair that with, okay, now you can actually invest in this before it even goes public on the US stock market, massive opportunity.
Yeah. So, at Facet, what's next for you guys? Like, I know you said you want to start tokenizing yourselves now, but where do you see yourselves maybe in 10 years?
So right now we have the launch of our banking product, which is the thing that we're going to focus the most on onboarding as many users as we can. The other thing is the launch of our blockchain. And if you think about fintechs and crypto in general, you normally have two endpoints. You have some companies that are the rails and the infrastructure, and other companies that are the application and the end consumer relationship. Now, at Facet, we have the two sides. And what that means is that we can collapse the middle and own our own tokenization layer, which means launching our own chain, bringing our own assets, and then just integrating it to the consumer-facing app. So right now, we have different products that are quite fragmented when it looks into which change they're on. So we have stocks on Arbitrum, we have a gold product on XCC, and then launching our own chain enables us to migrate all of this transaction volume and TVL to our own place, capture some of the fees that right now are going to the chain, but most importantly, vertically integrate into one solution where when we have these asset issuers that come to us and they want to tokenize and more than tokenize, I think they want to distribute, they want to sell their asset. We can just offer them a one-stop shop solution where we take care of their legals, we use our licenses, they tokenize on our chain, and then we sell it on Facet. So that's the main, besides growing our user base on the card and banking products, it's doubling down on the tokenization, because that's going to capture more value for us and enable us to bring new assets.
Yeah. On the banking side, so I know you said you guys started the banking products because of the gaps in the markets that you guys are serving, right? But where do you see the gaps in the traditional banking systems right now that could be bridged with blockchain and all this technology?
I think you could compare them between traditional banks on one side and then what you're seeing now, which is crypto neobanks, right? So if you put your money in a traditional bank, you can earn anywhere from 0.5% to 2%, some generous banks even 3%. But then with your on-chain banks, what you can do is that you can have on-chain savings accounts, meaning that your checking account's yield could come from these different DeFi strategies. For example, EtherFi has an account that's 10%. Plasma has yields of 10% on stablecoins. So when you present this option to the end customer you can go to your bank, earn 0.5% yield on your savings, or you can come here and you can earn 7, 8, 10%. Then it's going to be a very easy, rational decision for them. I think that the same way that you saw a shift in the pandemic in terms of how many people opened their first bank account in 2020, and then you had all of the banks that had their branches closed. So their first bank was actually Revolut, was TransferWise. It's the same thing that's going to continue happening. And their first platform is going to be one of these. So the difference right now is that most people have their stock broker account. You have your crypto exchange, let's say your Binance, and then you have your bank, and you have to be moving money from everywhere. You need to sell here so that you can send it to your bank and then you can spend it. Now what we're doing with Facet is that we're putting everything into one app.
One platform.
Yeah.
That's really cool. Okay, so we're just gonna do some quick fun questions before closing. Okay. What's one word to describe the future of finance?
I think it's borderless. So what happened in traditional finance is that you have the traditional finance stack and you have a lot of intermediaries. So when a big bank wants to expand, if they wanted, to another market, they need to look at the margins. So the margins from a customer in the US is way higher than the margin of a customer in South America, for example. So it doesn't make sense for a lot of these companies to even expand their services there. Now, what blockchain does is that it brings the cost of service down. And that enables you to go into all of these regions where the margins, the cost of service didn't make it worth it. And what that means is that crypto is the only thing that could make finance really, really global.
Really borderless.
Yeah, I think the other thing is also the remittances side, because before it was percentage based in terms of how much you were sending. And I think the average fees, I used to get paid in PayPal once, maybe 2-3 years ago, and if you've ever had that experience, you have to send it from PayPal to your bank account to whenever you want to spend it, and your average percentage fee is between 3 and 7%, which is massive. And then you see on-chain transactions that cost 3 cents. Doesn't matter if you're sending $10 or 1,000 or $1 million. So I think blockchain is what actually makes finance global.
Global, okay. Crypto, commodities, or stocks?
I'm all into Bitcoin.
You're all into Bitcoin.
I think like normally I would say that diversified, a balanced exposure to all of those.
Yeah.
Personally,
I agree. Yeah, I agree. I think Bitcoin isn't going anywhere.
Yeah.
It's here to stay. Although the market was really nice to us yesterday.
The last month, I heard a friend that was joking, and he was saying the only people that have been in a bull market has been the Trump family.
That's true. That's very true. Okay. Well, thank you so much for being here today. And thank you guys for watching. And as usual, a massive thank you to Web3 TV for this beautiful studio.